more hits we play, the more hits we get. URLradio.net. Stacey Sturm. And in the studio for another Financial Friday, I have my financial gurus from Solid Rock Financial. I have Brian Bloom and John Dwyer. How's it going today, guys?
Great, Stacey. How are you doing?
Good.
Doing good.
Now we've been talking buckets of money, and we are to our favorite bucket of money, which is the never taxed bucket of money. So let's talk about that a little bit.
We want to help people understand that there's primarily 3 buckets, and we want to focus on what the distribution rate is going to look like as it relates to where those monies sit in relation to the asset class, right? So the 3 different types of buckets are always taxed, partially taxed, and never taxed or tax-free. So the never taxed bucket is there's 2 primary characteristics of investments in this never taxed bucket, and that would be your Roth IRA and properly designed life insurance. So in this example, if we had $1 million in this bucket and you were to be able to pull out the 8% distribution rate, if the money is never taxed, what is your cash flow?
It's 100% of whatever it is, isn't it?
Yes, it's 80. So it'd be $80,000.
Mm-hmm. Okay.
So, Jen, you used the word cash flow. In the other buckets, you used the word income.
Exactly. So, great point, Brian. Is that remember that we were talking about the distinction between retirement income and retirement cash flow. Since this is cash flow, there is no reportable income on the provisional test of your 1040. So it is 100% tax free.
So, John, you mean that money coming out of this bucket the IRS never knows about?
In one instance, yes. In one instance, they're aware of it.
So, do you get a 1099 for either of them?
You get a 1099-R for the Roth contribution.
For the Roth contribution, but that doesn't make any sense. If the Roth IRA is supposed to grow tax-free and is distributed to you tax-free, why is there any kind of a tax notice provided?
That's a pretty interesting question, isn't it? And you being the CPA, it's interesting to where if you do have a Roth distribution, there is a 1099-R reported and generated for that. Even though it doesn't show up on the provisional test, it's still being reported as a distribution.
Yeah, it's really interesting because there's a couple key boxes on that 1099-R for the Roth IRA. The first box says how much your organization gave you, how much the cash flow was. So in your situation, $80,000. Box 2 is where they report the taxable amount. Now, since this is tax-free, what do you suppose they enter into box 2?
Well, if it was a tax-free account, you would just assume it would show a 0 in there, right, Brian?
Right. It's you would think, but it's not. It's left blank. It's left blank.
Intentionally.
Intentionally, and there's a little box next to it that's checked off, and it says taxable amount not determined. Well, how could they not determine the taxable amount when we've been told, and it's in the IRS regulations, that this is tax-free money? How could there be a taxable amount that they can't determine?
Well, my guess or suggestion would be is that it is still a reportable government-sponsored plan, and they can change the rules at any point in time.
Sure, yeah, and I suspect that rule is going to change sometime in the future, and our best hope, if they are going to change it, is that they'll grandfather all the growth up to a certain point and allow that to be tax-free, but perhaps tax the growth in the future, in which case then there would be a taxable amount.
Absolutely.
That's crazy.
Yeah, it almost makes you think conspiracy theories.
It does. You know, the government always tries to get money some way, shape, or form. Like the fact that that this exists.
Well, to me, it's scary. It's not conspiracy.
Yeah.
It's scary because it makes me think they really do know what they're doing in Washington.
Yeah. Maybe they just played them.
They do it.
They do it well.
well. So as it relates to this bucket, right? So, but again, it's still about cash flow, and in this bucket, because we're paying the tax now and putting the money in the account for tax deferral and tax-free distribution, we're going to always get more spendable retirement cash flow in retirement, regardless of rate of return. Now, look, I mean, it goes back to bucket number 1 was $52,000 spendable income, bucket number 2 was 72, and bucket number 3 was 80.
Okay.
Which one would you rather have?
Bucket number 3.
Bucket number 3 is the winner.
Yeah.
Right? And again, we're not even talking about rate of return. We're talking about, we don't care how the money got there, but if we had the same amount of money in each of these buckets, you have to look at getting down Mount Everest with the most guaranteed type of retirement that you possibly can.
Okay.
That reminds me of a class I taught, a high school finance class, and the final exam question. It was a one-question final exam, and that was, what is the key to financial success? What is the number one key to financial success? Do you know what the answer is?
No.
Oh, and listeners, you probably ought to get your pen and paper out and be ready to write this down. The number one key to financial success is more is always better.
Thanks.
But it's true.
It's
You
true.
just said it. You'd
It's
rather
true.
have the 80 than the 72 than the 52, right?
I want it all. Yeah.
Yeah.
And that's what we do at Solid Rock Financial Group. It's more is always better.
More is always better.
I got a T-shirt somewhere.
More.
More is always better.
More
It's
is
a
better.
it's a motivational poster with like eagles flying over the ridge. More is better.
Now,
John,
Brian, I'm
you're
gonna
gonna ask me?
Yeah, I'm gonna ask you a question here. So, Brian, because this income is off the radar of the IRS
Right. Until they decide to tax Roths.
until they decide to tax Roths, what else do we get from the benefit of this bucket?
Well, we've been talking about the other two buckets, the effect that income has on the taxation of Social Security. If, in fact, you can live your retirement without having any taxable income, number one, you won't have to file an income tax return. That's a big deal. Number two, if you can keep from putting more than $32,000 of other income on your tax return, then your Social Security is tax-free.
Okay.
Whereas in the other two buckets, half of it was taxable, and in the first bucket, the always tax bucket, 85% was taxable. There's one other thing, and if you don't have any income, what else are you eligible for? Well, you're eligible for government cheese,
Yeah.
otherwise known
I
as
was
food
gonna say government
stamps.
funding.
Yeah, you're eligible for a lot of government
Yeah.
benefits. I mean,
Yeah, there's
you know,
a lot of them out there.
A lot of our older Americans who are on Medicare, their Medicare premiums are dependent upon what their income is.
Yeah.
And so if you have more income than the first threshold, you pay more for your Medicare premiums than anyone else.
Right.
And so again, if you can keep taxable income off of your tax return, there's all kinds of great stuff that happens.
Right. I've heard government cheese is actually kind of delicious.
Yeah.
I wouldn't recommend it for lifestyle, but maybe for like, I don't know if you're hosting a party or something, it's pretty good. So once again, like what qualifies in this never taxed bucket?
So again, it's the Roth IRA,
Okay.
which a lot of people are aware of. But again, the Roth IRA is such a good type of asset that the government steps in and limits, one, how much you can contribute to it, and two, if
Yeah.
you make too much money, you can't do anything about it anyways.
Okay.
'Cause you can't put any money
Can't
into
put
it.
any money in. Now there's this concept called the backdoor Roth, where you fund an IRA and then you pay the tax and you put it back into the Roth IRA. But the reality is, for clients that actually make significant amounts of income, the best place to reposition that asset is specifically designed life insurance contracts,
Okay.
which people just don't understand.
I've always thought it's a gimmick. Do you know what I mean? For some reason, I guess I've always just kind of thought, because it seems like every insurance presentation you go to, they're like, this is your retirement plan, this life insurance. I'm
Well-
like, what?
Well, Stacy,
It
if
seems
you
like it's
buy-
a gimmick.
If you buy life insurance, who benefits from it?
Well,
Not you.
not me. You can be dead.
Because, see, that's death insurance.
That's true.
We're talking about life insurance.
Yeah, that's true.
Where distributions can come to you from your future death benefit,
Yeah.
tax
That
free,
you don't want anyway.
that you don't want anyway, because
Right.
it's going to benefit someone else.
That's right.
But why not spend your death benefit while you're living?
That's true.
And if we can show you how to do that effectively, again, it all goes to the type, one, the type, and two, the design is critical. And a lot of, advisors out there just don't know how to properly design it. And so it's based on death benefit, not on accumulation, and specifically not on distribution.
Yeah.
But yet, it's one of the most efficient places you can park your assets.
Yeah, that's probably a whole show in and of itself.
It is. Yeah.
Right. Absolutely. I'm looking at my life insurance now and thinking, you know what? If I die, the kids can sell the house and pay for my funeral. I kind of want to go on a vacation. I think I kind of want to go to the Caribbean.
Yeah. So, just kind of wrapping it up,
Yeah.
which bucket would you rather live out of? Because, again, where your money is more important than what it earns.
Absolutely.
Is it behind door number 1, door number 2, or door number 3?
I think let's just eliminate door number 1 altogether.
Yeah.
We want door number 1.
Right? But yeah, where's everybody positioning their money?
Most people have it in door number 1.
Door number 1. But it's not what they want. I will often ask clients, do you want your money taxable, tax deferred, or tax free? What do they always tell me?
Tax free.
Tax free.
Yeah.
And then I'll say, take a step back and look at where you're investing your money. If you want tax free, but you're putting your money in all the other places that is not gonna arrive at that conclusion, how do you get what you want when you're starting out with the wrong premise?
Okay, so if people want more information on these plans, and then also have you maybe take a look at what they're currently doing, how can they get a hold of you guys?
They can give a call out to our office at 701-223-1000, or they can get hold of us on the web at srfinancial.net.
And what's your email address, just in case, too?
My email address is john@sr, as in solid rock, financial.net.
And how about you, Brian?
Mine is my first initial B, my last name Bloom, BLOOM, at theamericagroup.com.
Perfect. Thanks for coming in today, guys.
Oh, you're welcome.
Thanks a lot, Stacey.
We'll be back with more Financial Friday on urlradio.net.